Hello everybody, welcome again. We will continue with capital gains tax, and now we will do last portion of capital gains tax, which is just a small portion, but we will do a couple of examples as well. Then with the help of them examples, and we'll do another question, not example actually, basically it is a past exam paper. So with the help of that question, we will understand this topic. And we'll do another question as well. So we'll do basically a couple of questions in this lecture, and I'm just sharing the screen with you. So we will do a couple of questions. One will be relevant to this topic which we are going to study now, and other one will be the general relevant to the general different things of capital gains tax. Right now, as you can see on your screen, it is a principal private residence. So which means that you may have different houses, but the one house where you are currently living, that is your main house, that is your principal house. Now the ownership is compulsory obviously, but the time you are spending in that house, the occupation, the period for which you are living in that house, the more you live, the more exemption will you get. Now when I say exemption of what? Now when you sell that home, you will make some gain. Now that gain may be exempt, could be exempt, if the more you live in that house, the more exemption you will get. So if I have the main house, the only house, or the main house. So if I have the only house, that will be my main house. But if you have different houses, then out of them houses, there will be one house which is your main house, where you normally live. Now that whole house will be your principal private residence. So if I sold that house, so I make some gain. That gain could be exempt up to some amount. So the more time you spend in that house, more gain could be exempt. So it is basically proportionate to the period of occupation in that house by you. So the more days you spend in that house, more relief will be exempt. More gain will be exempt. So you'll get more relief. As you can see on your screen, it says the gain arising on sale of an individual's only or main private residence is exempt up to this amount. So take the gain multiplied by period of occupation, so the period for which you have been living in that house, divided by total period of ownership. Now actually there are two types of occupation, there are two types of living in the house. One is actual living, actual time you spend in that house, and other one is deemed occupation. Now we know what actual occupation is, the time you actually spend in that house, but what is deemed occupation? Now in order to calculate this relief, we will consider few portion of times as occupation. Now what is that portion of time? Say for example 3 years if you spend overseas, or the time, whatever time you spend overseas. So like that, so the period of time, some periods of time will be considered as deemed occupation, they will be considered as occupation, and that will be included in the actual occupation so that you can get more relief. So let's look at the notes now, then you will understand it. When calculating the period of occupation, the last 18 months are always treated as period of occupation. So it says that the last 18 months, regardless of whether you have been living in the house or not, last 18 months will always include in the occupation. So it means that it is good for you because you will get more relief. Then it says some period of absence may also be considered as occupied, which is deemed occupation, provided the period of absence was at some time both preceded and followed by the period of actual occupation. Now the following a few things, they will be considered as deemed occupation, they will be considered as occupation, but there is one condition, that these periods must be both preceded and followed by the actual occupation. So it means that period before that and the period after that must actually be covered by the actual occupation. Only then we can call this deemed occupation. So what is deemed occupation? Up to 3 years of absence for any reason. So you can say, while calculating the deemed occupation, you will say that 3 years for any reason, subject to the condition that it is both preceded and followed by the actual occupation. The second one is that any period of absence to live abroad due to his employment. So any period you spend abroad for employment will be considered as deemed occupation. So you are not present in the house, but it will be considered as that you have been in the house. So the next one is up to 4 years of absence to live elsewhere due to his work. So elsewhere means within the country. So if you are within the country for the purposes of work, but you're not at home, say for example your main principal private residence is in Liverpool and you have been working in Manchester, so up to 4 years is exempt. Up to 4 years will be included in your occupation, deemed occupation. Then it says garden or lawn of up to half an hectare attached to the house is also exempt under PPR. So if you have a house and in that house you have a garden, and then up to half of the hectare of the garden is exempt under PPR. Now if it is in excess of that, it could be subject to CGT or it could be exempt depending on the house, how big your house is, right? So the more big your house is, then it's fine, you can have the big garden as well. But if your house is just small and you are, the whole of the house, most of the house consists on the garden, then chances are that it will be taxable under the capital gains tax, right? Right then. So next one, it says where a person has more than one residence, like I said, if you are a rich person, you have too many houses, then you can say that is my principal private residence. He may elect for anyone to be treated as his main residence. Where a married couple lives together, then only one residence may qualify as residence for relief. So obviously if you are a couple, then you may have two properties, and only one property will be classified as PPR. If part of the residence is always used exclusively for business purposes, then on that portion you won't get any PPR. Then there is a letting relief. The next one is the letting relief. Now PPR, principal private residence, may be extended by the letting relief. Basically, letting relief is an extension of PPR. Excuse me. In case if you let your house, if you let your main residence, then you will get the letting relief as well. Excuse me. Now, letting exemption is lower of these three. Gain already exempt under PPR, the gain which we have calculated already under the principal private residence. Obviously, we will first do the PPR, then we will go to the letting relief. So the gain which we have already calculated under the PPR, gain remaining after PPR, if there is any gain still remains after PPR, that thing, and the last thing is £40,000. So whichever is lower of these three, that will be our letting relief. Right? Alright then, next one is the overseas aspects of capital gains tax. Now, we have seen overseas aspects in our income tax section anyway. Basically, especially we looked at in our residence chapter. Now what we said is that if you are a resident, there were different scenarios. One was resident and domicile, then there was someone who is resident but not domicile, and different things. So like that in capital gains tax as well, it says that if you are a resident and domiciled in the UK, then all of the assets wherever they are, you will have to pay capital gains tax on a rising basis whenever you sell them on the gains. However, if you are a resident but not domiciled, we know that gain will be subject to tax on a remittance basis, right? It could be either automatic or it could be claimed, right? Now obviously excuse me, obviously if you claim the remittance basis, then you won't get any personal allowance and annual exemption amount of annual exemption of capital gains tax, and on top of that you might be paying some charge as well. Remember, 30,000 and 60,000 pounds, depending on how long have you been living in the UK. Right then, excuse me. Now in capital gains tax there is another additional thing as well, which is called temporary non-residence. Now what is temporary non-residence? it tells us just beneath that, if you see, now what is temporary non-resident? They are outside the UK when an individual is outside the UK for less than 5 years from the departure and the return. So someone left the UK, but they will come back they are leaving the UK with the intention of coming back within 5 years. And they were UK resident for 4 out of the last 7 years before their year of departure. So that person will be temporarily non-resident if they have been resident in the UK for 4 out of the previous 7 years before departure, and they are only leaving the UK. They are only leaving the UK for less than 5 years. Now, what happens is that if you are a temporary non-resident, then the period of absence and the period in which you are not in the UK, if you bought any assets when you were absent from the UK, so you were overseas, but you were living in the UK, you were sitting in the, you were living in Dubai, so you were sitting in Dubai, and on the phone you were doing some business, so you were buying some assets in the UK, and you were selling them as well during the period of absence. So the transactions which you have been doing when you were absent from the UK, so transaction means you are buying and selling the same property. So if you're buying and selling the same property while you are absent from the UK, that will be exempt from capital gains tax. Now the assets which you sell and make some gain in the year of departure, that will be taxed in the year of departure, and any other assets which you sell, they will be taxed in the year of return. Right? So overseas aspects of capital gains tax. So if a person is resident and domiciled in the tax year, he will be liable to capital gains tax on the disposal of assets situated anywhere in the world. If a person is resident but not domiciled, UK CGT on disposal of overseas assets will be payable unless he claims remittance basis. In this case, he will only be liable to UK tax if his proceeds are remitted to the UK. An individual who claims remittance basis is not entitled to annual exemption. We'll have to see the residence chapter. We've already seen it anyway. For disposal of assets by a temporary non-resident, the asset disposed in the year of departure are taxed in the year of departure. Any subsequent disposals are taxed in the year of return. Now, just at the end of this page, it says small thing: any assets bought and sold during the period of non-residence is exempt. So if you've bought and sold the same asset during a period of absence, it will be exempt from capital gains tax. We will quickly do a question from our exam kit. Please make sure you come to page number 4 of your exam kit. Please come to page number, not page number 4, question number 4 of your exam kit, BPP exam kit. Question name is Geordie, and it was examined in June 2015. So if you have any other exam kit, please make sure you come to this question. Question name is Geordie, and it was examined in June 2015. As I said to you earlier as well, don't look at the past papers from ACCA's website, because they are not updated one, and especially for this finance sector, there has been many changes, so you will just confuse yourself. Excuse me. Now if you go to the requirements section of this question, we're doing C part only. In C part it says capital gains tax, and it is worth 11 marks. Now I'll read the notes from capital gains tax. Excuse me. Assuming that Geordie becomes non-resident from the period 6th of April 2018 and does not return to the UK for at least 4 tax years, explain how this will affect her liability to the UK capital gains tax in the tax year 2018-19 and future tax years, and in 17-18, the tax year prior to departure. And calculate capital gains tax liability for the tax year 17-18. You should include explanation of the chargeable gains which have arisen or may arise in that year. Excuse me, and the tax rates which will be charged. So let's read the question now. Extract from the letter from Geordie. I've always lived in the UK. I plan to leave the UK and move to country of R on 5th of April 2018. My intention is to move to R permanently and acquire a home there. However, if my children are not happy there, after 4 years, will return to the UK. Now, although she's willing to stay there permanently, but she's not sure, because she said that if her children are not happy, then she will come back to the UK. So we'll assume that she's temporarily non-resident because she'll be coming back within 4 years. My husband died 3 years ago. My brother lives in the country of R and is the only close family member, after her husband. I have not after her husband, after the children. I will not have any sources of income in the UK after 5th of April 2018. I intend to work part-time in the country of R so that I can look after my child. In the tax year 18-19, I will return to UK for holiday and stay there with friends for 60 days. For the rest of the tax year, I will live in my own home in the country of R. Right? Now after that, my incorporated business, we don't have to read that, I think, except for the business premises. Let's read it actually, because you don't know about this one anyway. So I prepared the account. I prepared accounts to 31st December every year until 31st December 2016. I then ceased trading on 31st May 2017. I made a tax-adjusted trading loss in the final period of trading of £18,000. Then, it says I attach an appendix setting out the information you requested in relation to the business. I was unable to sell my business as going concern due to the decline in its profitability. Accordingly, on 31st May 2017, I sold my business premises for £190,000. Excuse me. Now he sold business premises for £190,000. Now these business premises have been used within the business, right? Then I paid £135,000 for these premises on 1st of June 2003. I also sold various items of computer equipment. Now computer equipment, which it says I had used in the business, for a total of £2,000. Now computer equipment, you remember tangible movable property. What was that tangible movable property for capital gains tax purposes? Yeah, you're right, it was chattels. Now whenever you sell some chattel, and if the sales proceeds are less than £6,000, then you don't have to charge any capital gains tax on that. Now in this case it says we sold computer, which is a tangible movable property, and the proceeds are less than £6,000. So you don't have to charge any capital gains tax. That is a rule for chattels. This equipment cost me a total of £5,000. Computer equipment, he's talking about computer equipment. I retained the remaining inventory valued at £3,500 for my own personal use. Now this inventory, have we read any rule about inventory on capital gains tax? We don't have to pay any capital gains tax on inventory, because you remember the different things, subject matter, frequency of transaction, them things. If you are not sure about it, that whether you have to pay income tax or capital gains tax, then you just go there and see it, whether we have to pay capital gains tax or income tax on inventory, and I'm sure that you will find that you don't have to pay any capital gains tax on that. Right? After that it says my taxable income is given below. We don't have to read that. And then other matters. Now as far as business premises are concerned, we will have to pay capital gains tax on them, but because this business premises has been used in the business and it has been used for more than 1 year, then we might be able to claim entrepreneur relief. So we'll have to read some more information about that as well. So let's continue reading the question. Other matters. On 30th of April 2017, I sold my house. Now he has sold his house as well, which is built on a 1 hectare plot for £400,000. Excuse me. Now it says the house is built on 1 hectare plot Whereas we know that under PPR we are allowed 1/2 of the hectare. If it is 1/2 of the hectare, then it is exempt under PPR. Now because it is in excess of one half, if it is in excess of half of the hectare, so what we have to do is we will have to see that what shall we do. We'll have to confirm from HMRC because up to half of a hectare it is exempt. If it is in excess of that, you might have to pay capital gains tax on that. And another thing is that because it is a house, so it is a residential property, and remember, residential property you will have to pay different rates on residential property, either at 18% or 28%, depending on where your income falls in, which band your income falls in. And the chances are his income falls in higher rate band, because the plot value is £400,000 anyway, and he has sold some business premises as well, so chances are he will have to pay a capital gains tax at the rate of 28% if HMRC says that you have to pay tax. But we'll have to confirm from HMRC that it could be exempt as well, so we'll have to ask from HMRC. Excuse me. And it says that I purchased the house for £140,000 long ago and lived in the house throughout that period. Throughout my period of ownership. I have been living in the rented house since 1st of May 2017. That is the date when he sold his house. My tenancy of this rented house will end on 5th of April 2018. When we spoke, you mentioned that you wanted details of any gifts received. The only item of significance is £2,000 ordinary shares in Butterfly Limited, which my mother gave me on 14th of May 2015, when the shares were worth £60,000, and Butterfly Limited is a UK resident trading company. Now, because he has received some gift from her mother, so what happens is that there are some inheritance tax implications as well, but we will just ignore the inheritance tax implications. But what we can see here is there might be capital gains tax implications for the gift relief, because there is a gift of shares. My mother and I submitted a joint claim for the capital gains tax holdover relief on the gift of these Butterfly Limited shares. So see, there is gift relief. They have claimed the gift relief on these shares, so they don't have to pay any capital gains tax. Remember, because it is a deferral relief, so they might have to pay if they will have to pay eventually anyway on some circumstances. So let's see. Then it says, I recently received an offer of £68,000 for these shares, but I decided not to sell them. My mother had inherited the shares from her brother on 18th of December 2002 when they were worth £37,000. Neither I nor my mother have ever worked for Butterfly Limited. Now what happens is that when did he got shares from the mother? It was 14th of May 2015, wasn't it? The only item of significance is £2,000, 2,000 ordinary shares in Butterfly Limited, which my mother gave to me on 14th of May 2015. Now he's receiving the shares on 14th of May 2015. Now remember that whenever you receive the shares, and if you cease to be UK resident after that within 6 tax years, then gift relief, if you have claimed any gift relief, that will be payable. Now because he's received in 2015 and he's going to be non-UK resident from the next tax year, so what happens is that because he's going to be non-UK resident within the 6 tax years, then this gain, held over relief, gift relief, will be taxable. Now what is the gift relief here? In this case, excuse me, in this case, shares were worth £60,000 that date when he got it, and her mother paid £37,000 for that. So the remaining gain was, whatever the gain was, 60,000 less £37,000, and so it is going to be £23,000, I think. So this £23,000 was a gift relief because they did not pay any tax at that time. but now it will be payable. So you will have to pay, capital gains tax on £23,000. Right? All right then. So the requirement said that what will happen when he ceases to be UK resident, and what will happen about his capital gains tax liability. Now, normally what happens is that whenever you are non-UK resident, like in this year, he will be non-UK resident. So if you are non-UK resident, then you won't have to pay any capital gains tax, right? But because his intention is, it's her I think, yeah, it's her. Her intention is that she won't leave the UK. Her intention is that she will leave the UK permanently, but she's still not sure, because she might come back. Because if her children they're not happy there, so she might come back to the UK. Now in this case we will consider her as temporary non-UK resident. So what happens is that in the year of departure, whatever the assets are, whatever assets she sold, they will be taxable in the year of departure. Now if she bought and sold any assets in the period of absence in the UK, then they will be exempt. Now any other assets will be chargeable in the year of return, like the rules which we have just read from our notes, right? Now another thing is that this business premises, she can claim the entrepreneur relief on the business premises, because she is going to cease the business, and this business is going to be this business premises has been used within the business anyway, and so she can claim entrepreneur relief on that as well, because this was business asset which was used in the business for consecutive 1 year period, and business is going to be ceased anyway. Excuse me. So that's why she can claim entrepreneur relief on that as well. So we know that when she claims entrepreneur relief, then we'll have to pay tax at the rate of 10% on that, right? So £190,000 less 135, whatever the remaining amount is, we'll have to pay capital gains tax at the rate of 10%, because we can claim entrepreneur relief on that. Excuse me. Right? Right. Anything else about it? Right, there isn't anything else, so excuse me, that's it about this question. So what happens is that we have told her that what would happen when she became non-resident. So in the current circumstances, we can see that she's temporary non-UK resident, so we will have to tell her about it. And another thing is we'll have to calculate the capital gains tax liability. So we know that we'll have to pay capital gains tax at the rate of 10% on business premises, because we can claim entrepreneur relief, and you will have to tell the reasons as well about the entrepreneur relief, why entrepreneur relief is available. And another thing is that we'll have to pay capital gains tax on the gift relief, which was postponed, and you now have to pay capital gains tax on that. So you'll have to pay capital gains tax on that, right? And another thing is about computer equipment. We know that you don't have to pay you don't have to pay any capital gains tax on that, because proceeds are less than £6,000, and it is tangible excuse me, tangible movable property. So that's why you don't have to pay anything on that, right? And another thing was inventory. Yeah, inventory is not subject to capital gains tax anyway, so you don't have to pay capital gains tax on inventory as well. Only one thing about house, and I've already told you about house anyway. So it depends on that. If HMRC says that if it is chargeable because it is more than half a hectare of the house, so then you will have to pay capital gains tax on that as well. And if it is exempt, then you don't have to pay any capital gains tax on that. right? And if you have to pay capital gains tax, you will have to pay at the rate of 28% because it is a residential property. Right? Yeah, that's end of this question.